Hello friends, today is my 14th presentation for the team of Corporate Finance and Accounts function, and the topic is developing budgets for Corporate Finance and Accounts function. It is overall my 45th presentation considering all the YouTube presentations which I have made so far. Now what I have included in this is 13 key activities for making the budgets, P&L profit and loss related template for budgeting, balance sheet related template for budgeting, cash flow related template for budgeting, operational level budgeting for F&A function, 15 direct responsibilities areas, and operational level budgeting for F&A function, 15 indirect responsibility areas, and lastly activities that can affect the business adversely while developing the budgets. Now 13 activities for budgeting making. Now by and large the activities will be similar for the functional level budget also, but let me start with this overall budgeting process. The first activity is planning for the corporate objectives. Here the corporate team in consultation with CEO, in fact it is the CEO and MD of the company who discuss this with the key stakeholders within the company, and they evolve what is called quantitative targets and qualitative targets. Quantitative targets include like sales numbers, values, market share, cost, profits, etc. And qualitative means new product development or services development, globalization perspective, new plan at offices, at group level, business unit level, etc. Activity number 2 is which is to be performed by the BU heads, constituting a CFT cross-functional team for designing the budget structure and elements, wherein the usually CFO is the business unit coordinator and obtains a copy of the corporate objectives from the BU heads. Third activity is developing the template for the budgets. This is to be done by the CFO in each business unit in consultation with the BU heads and circulating the blank templates to each functional head named as the functional HOD along with the corporate objectives. Sharing of the common assumptions like employee cost rates, what will be the unit rate per month or per annum, etc. for different levels like staff, workmen, managers, etc. etc. Overhead rates per unit, IT hardware and rates which are to be taken, the key items for uniformity across the business units. Then CFO is expected to give the timelines for the budgets, making of the budget and submission, and the budget review dates in consideration of the BU heads. Activity number 4 to be performed by the each functional HOD along with the respective business unit head. Now let me just clarify that I am proposing this budget based on a company, for example, which has got several business units making different kind of products, and they could be located at different kind of locations like cities or states or countries. Okay, so the fourth activity is that each functional HOD along with the business unit head deliberates on the budget targets, that is on how to achieve the budget targets, and what are the risk perceptions, clarifications, resources required, constraints and plans, etc. etc. Activity number 5 is each functional head within each BU again making a detailed budget and submitting it to the CFO, clearly listing out the key assumptions and the business unit level risks that may affect the functional and BU performance and accomplishment of the budget targets. The risk may include, depending on each function, it may include customer demands, competition, economy, political, social, raw material, government policies, taxes, etc. etc. Activity number 6 is that within the CFO within each business unit receiving the functional budgets and doing the following. Now the aligning of the functional budget as per the template and filling up all gaps or getting it filled up, and finance and accounts team summing up the below parameters at the business unit level, because there may be 5, 10, 15 functions within the each business unit like purchase or sales or HR or manufacturing or construction and so on and so forth. So the F&A team will be consolidating this total organization structure and manpower required at each level, employee cost, capital expenditure, IT hardware, software, overheads, expenses, etc. etc. which have been previously given by the respective functional heads, duly approved by the BU head. And then overall scheduling budget review meeting at the BU level, where all functional HODs must participate to resolve the interfunctional issues and bring about synergy. Activity number 7 is, which is to be done where BU head plus CFO also joins along with the functional heads, and they review the any changes which are required in the joint review meeting with the functional level budgets and the divisional level budgets. Now, based on the above deliberations, CFO then summarizes the following vis-a-vis each function: revisit of the assumption considered by each function, review of the resources to accomplish the budgets, which is financial budget, organizational structure, manpower, equipment, machine, new skills, technology upgradation, etc. Strategies for aligning of the functional budget targets to corporate goals and targets. And preparing and circulating the minutes of meeting each functional head for amending the budgets in line with the review meetings. And activity number 9 is reviewing and resubmission of the revised budget to CFO as per the agreed schedule. This is to be done by the functional HOD based on the input received from the CFO in the budget review meeting mentioned at activity number 7. Continuation, then CFO consolidating of the functional budgets to make a budget docket and review. This is based on the further inputs which are received. Review the amended budgets with the BU heads, coordinating with the functional heads for any further changes, and seek BU head approval and submission of the budget docket duly approved by the BU head to CO or MD with the copy to BU head and functional HODs. Activity number 11 is CO and MD now join and along with the BU heads and the CFOs, respective CFOs, and the budget review meeting is held by the budget review committee, wherein the overall budgeting level at the BU level is reviewed by the CO and MD, and inputs from the CO MD are taken. Now activity number 12 is that CFO, based on the previous budget committee review meeting with the CO and MD, the CFO would recommend changes to the budget review committee, seeking approval from the COMD of the revised budget and circulating the approved budget by the COMD to the BU heads and respective functional head for subsequent circulation by the functional HOD to key operating team members. Then putting a system, last level is BU head. Now once the budget has been finally approved and sealed, then BU head and functional head, they will put in a system in place with inputs from the CFO for accomplishment of the budget strategies and countermeasure to accomplish the budget targets. Next is the budgeting for at the business unit level or the company level for the profit and loss and for the balance sheet and the cash flows. This I am proposing 3 different sections which is to be coordinated by the CFO. In fact, the 13 activities which I have proposed above, these are activities number 3 to 13 are common across different functional budgets, be it the production, be it the construction, be it the sales, be it the HR, be it the quality, be it the R&D. The activities are by and large similar and hence not being repeated. Now I am focusing on the profit related template for budgeting. Now this is aligned to the usual P&L and balance sheet annual report of the company. Broadly for understanding, I have given 7 heads, which is the sales revenue, the other income, the less material cost, the less other expenses like employee cost, finance cost, depreciation, other expenses, gross profit, the tax expenses, the net profit after the tax. Now this I have given in different rows, and unit of measure can be as appropriate. It can be USD or rupees or any other applicable currency. On the third column, column number 3, the CFO would finance and account team would consolidate the budget values based on the previous approvals obtained. Now for example, in this one, the sales revenue would come from the functional budget of the sales team. Other income will also come from the various inputs from the different teams. Material cost will come primarily from the purchase and contracts team. employee cost would come from the HR team's budget, and so on so forth. Balance sheet related template for budgeting. Here again, the template is primarily in line with the company's balance sheet, where there are different kind of rows which are there, comprising of equity and liabilities, non-current liabilities like long-term borrowings, current liabilities like vendor payable and so on, assets like non-current assets like fixed assets, intangible assets, long-term investment and so on, then current assets like inventories, receivable and so on forth. And these are also based on the inputs which have been previously received from the respective functional level budgets, and unit of measure can be as appropriate. In the third column, budget values will be incorporated. Cash flow related template for budgeting. Now this is primarily prepared by the consolidated by the finance team. Here there are cash flows from three activities. One is cash flow from operations, number two is cash flow from financial activities, and number three is the cash flow of investing activities, where inflows and outflow would be shown separately. I'll come to detail of these at serial number 6, 7 and 8 in the forthcoming slides, and based on this overall cash flow is drawn. Now unit of measurement can be as necessary, and budget value will be incorporated here. Now operational level budgeting for finance accounts. Now I'm coming to core finance and account function related aspects for the budgeting. Now here these are the 15 parameters for which budgeting needs to be done. Now these can be either qualitative parameters or quantitative parameters. So qualitative parameters, for example, are IPO and equity related, long-term borrowings, investments, merger and acquisition or JV related, and board matters. Now these are the qualitative parameters, and I have given these as, for example, in the case of IPO equity, the pricing, the target related to budget related to the pricing, the road shows, the percentage subscription, the cost, equity, etc., etc. Now these are to be drawn maybe in the separate supporting sheets and to be incorporated in terms of the budget, overall budget value. Similarly, for the long-term borrowing, the borrowing rates, the cost from the bank's FI, covenants, credit rating, etc., etc. These are to be incorporated in the second row number second. Investment, the qualitative risk analysis, perceived return on the investment, choice of shares, bonds, debentures, etc., etc. These are to be incorporated in the last 1, 2, 3, 4, 5, fifth column. And board matters, these are to be incorporated in this direct responsibility areas. Now please appreciate, these are all qualitative parameters. Whichever is possible to have quantitative parameter, this can be shifted to the quantitative aspect. The next parameters are like cash flow from the business. This is where point number 6, 7, 8, which I had said in the previous slide, if you please recall. Here I had said that serial number 6, 7 and 8 for the cash flow from operations, financial activities and investing activities. So here are the point number 6, 7 are the various components of the cash flows. For example, inflow maybe in this case is from customers, interest received, dividends, rentals, etc. Outflows to the vendors, employees, taxes, etc. Similarly, cash flow from the investing activities, from the sale of assets, intangible, company security, divestitures, loan repayments, etc. And similarly, I have given this for clarity, what are the components of this cash flows, three type of cash flows, and then free cash flow is determined and the cash burn ratio is given, and I have given the formulas in my book. These are given in detail, and if you please recall, these are also in my one of the earlier presentation which I had made on the KPI and the KRAs, performance rated and key performance indicators and performance of the finance and team function. There I had covered this in detail, so I am not duplicating this. So here the budget values is to be incorporated here. Serial number 11, 12, 13, 14, 15, these are basically operational cash flows ratios, solvency to debt to equity ratios, liquidity working capital requirements, liquidity ratios, and other operational parameters. Now these are to be budgeted clearly for each of the aspects stated here. Next one is operational level budgeting for indirect responsibilities areas, which have been identified as 15 aspects. Like here liquidity quick ratio. here it is cash and short-term securities and account receivable, etc. Why I am calling it indirectly? Because finance team is not directly responsible for account receivable or current liabilities. Profit margin, again it is shown here as indirect responsibility because it is earning is primarily coming through the sales function, so that's why it is shown as indirect responsibility. Yeah, of course the interest, financial interest cost is of course the responsibility of the finance accounts team. Gross profit margin, again net sales revenue minus cost of goods sold. Now these are to be computed based on the MIS retained developed by the finance account functions. PBT, profit before tax, earning before interest, depreciation and tax. Here of course the many components, the accounts team has direct role in terms of the some of the parameters. Next is 6, 7, 8, 9, 10 are the aspects like sales expense, expense to sales ratios, return on equity, earning per share, dividend yield, return on assets. Here I have given the basis, how to compute these parameters, and the budget values are to be incorporated. Then the some few ratios like financial leverage, account receivable turnover, sales outstanding, average vendor credit, inventory turnover. These are to be of course compiled by the finance account function, but based on the inputs. Like for example, account receivable is based on the input from the sales team. Similarly, the day sales outstanding, average vendor credit is based on the credit terms which are negotiated by the purchase team. Inventory turnover is of course based on the average inventory maintained by the purchase team based on the directions of the manufacturing team or the construction team. Now activities that while making, now we have seen that there are several activities which are there for making the budgets. We talked about the P&L budget, we talked about the balance sheet budget, we talked about the cash flows budgeting, we talked about the direct responsibility aspects, 15 parameters. We talked about the indirect responsibility aspects, again 15 parameters. Now what is important is these are the very fundamental aspects which must be accurately budgeted. Now the activities which can adversely affect the business is that providing incorrect inputs to the senior management at the BU head, that is to the BU head level or CEO level or MD, with malicious intent for obtaining easy budget targets. The target setting of the following is not objective at different levels. Quantitative parameters are not set objectively. The qualitative parameters are not set objectively, and these are biased. There are biased selection of the applicable competency in their targets. Now, budgeting parameters are neither comprehensive, not aligned with the organization objectives, and may contain transaction-related daily routine activities rather than the high-level budgeting parameters. Target settings are biased, and this is with the objective to reprimand or favor specific team levels or employees, leading to demotivation or dissatisfaction, and not ensuring restricted access right to the budget docket, thus enabling persons to make unauthorized changes in the budget target which serves improve budgets. Now, therefore, the basic objective is that budgeting must be accurate. Future references. Now, these are in detail covered in my book called Profitability and Ethics, my second book, Essential Profit and Ethics, Essential Ingredients for the Business Success. And I have given the links for procuring this book at the India level or the international level. And you can also refer to some of the blogs on my website, which is given here, www.ethicalprocess.com, and you can also refer to some of the articles of interest in the Facebook and LinkedIn reference which I have given. In fact, in the modified website, I have also uploaded some of the YouTube presentations also out of the total presentation I have made so far. I hope you like it. Thank you very much.